Okay, so I think markets are following this algorithm, reflate, rotate, and repeat, right? So in terms of reflation, just now I mentioned economic growth is improving, and amid that, however, we need to recognize that different economies are at different stages of reflation because it's an uneven recovery. So investors are very quick to look for the catalyst as to where the biggest reflation trade is going to be and rotate toward it. And then they're just going to repeat that formula. So we think that it's pretty much going to continue for most part of the year. I think some of the examples that we've seen is that they've been in and out of China. So China was first in, first out last year. And then they've lost a bit of enthusiasm recently after China is now engaging more in gradual policy normalization. And then in terms of EM as well, it was the biggest, I guess, one of the biggest consensus trades in the beginning. EM, Asia, Japan outperformed US. But given the recent rise in bond yields, the rise in US dollar, we've seen a bit of a pullback in terms of EM. Given also that in the US, we're seeing this massive tidal wave of fiscal stimulus coming on board. So people are also getting more jittery on that.
Where are you seeing value across Asia right now? Because a lot of tech has already run up. Some of the pandemic beneficiaries, pharma has done well. Some of, like I said, internet-related stories have done well. What about the battered names? Are they catching up? Are we seeing conviction come back into the airlines, into travel, tourism, leisure, hospitality?
We've seen some backup in those names already, but I think now where we're seeing is that just now I talked about value cyclicals, the rate sensitives. So that's still where we want to be. But I do recognize that there's increasing selectivity, as you mentioned. And so the risk reward is getting less attractive. So really, it's now more into very much into active bottom-up stock picking, but that is pretty much where we're still looking for opportunities from a tactical perspective, and then more from a longer-term perspective, from a secular perspective, the growth names. I think that is more long-term investing. But if you think about where we are, whatever happens day to day, we think that the real rates, while they move higher, they're still going to be negative for longer, and that supports the growth and the tech names. So it's kind of like you want to be tactical on the value cyclicals, especially rate sensitives. And then on the other hand, in terms of your core portfolio, you want to keep looking for opportunities whenever there are any sell-offs. You want to keep adding on the growth tech names, because that secular environment is still one of low rates and still one of low growth. So we think that that's still a conducive environment for these stocks.